Welcome back to Invest Global. Today we're looking at crude oil, its effect on the macroeconomy, along with other indicators that are very, very important to take in mind, just for a perspective view so you kind of have the map and know how to navigate this market, because you can really make money trading in any capital market as long as you have the map, in my opinion. And that's why I talk about macro indicators like the US dollar index, like looking at crude oil and the 10-year yield. Go watch this video that I made the other day on the Federal Reserve, inflation, crude oil, and the US dollar index. I'll have a link down below in the description, but it really goes over, why you don't want to look at these indicators just in a vacuum, right? So some people, you may go, hey, the Dow is up 3 points today, or the S&P. You tell them some indicator and they go, huh, because they have zero idea what it means. The point here is not to look at crude oil just to see the price and go, huh. No, the point is to realize that positive crude oil is positive stock market futures. And negative, so for example, then you go to the US dollar index, and the lower the US dollar index, it's positive for stock market futures, okay? So the weaker the dollar, the more positive stock market futures, especially when the 10-year yield, the Treasury 10-year yield, which is another macro indicator I look at, is sideways. I mean, we are literally in the perfect situation where we're going to see higher stock market, higher highs. In the mainstream news, really what they're telling you is, oh, this is happening. We're seeing these new highs. Oil's hitting new all-time highs in this article from Bloomberg. The point is, again, guys, anything you see on the surface level as far as information, if that's all you're thinking is the surface level, you're thinking the wrong way. The way you want to switch your thinking is taking this in as data, forming a thesis, going, okay, what's the narrative in the market? People think that the stock market's hitting new all-time highs and oil's hitting new all-time highs because of random reasons. They're not understanding that what the mainstream kind of media is telling you to think, for the most part, is, these new all-time highs are coming about because of positive situations, because of the pandemic. But truly what we see is this disconnect, as I've been talking about so much here, in the markets, in the actual economy. You see the actual economy, we're kind of beginning this free fall collapse in the economy. You look at local businesses, but markets, new all-time highs. This is being propped up. This is an artificial situation. I cannot emphasize that enough. This is just looking at it objectively, truly. It may sound like it's my bias, but I've studied this market. I mean, I've really tried to be objective as possible. And my methodology, my way of thinking is kind of the scientific approach, where I form my own thesis on what's going on. I test that thesis against an antithesis. So I seek out disconfirming evidence and I go from there. And one of the things you have to keep in mind with crude oil, as I said, is this is hitting not new all-time highs, sorry, 2-year highs. So you see where we've been at, right? So in this area, by the way, this is light crude futures. I'm going to show you a little article here that goes over some important things you should know about crude futures and investing in oil. This is kind of a clickbaity title, but they actually lay out some very important things that you should keep in mind here. So here in a second, we'll cover that. But the important thing to keep in mind with crude oil is, again, like I said, the macro thesis around higher crude oil is higher stock market. And the negative, the lower the US dollar, the more positive it is for the stock market. When the 10-year yield is sideways, it creates for a situation where the stock market can see higher highs. So you have to take all these things into account, and then you can invest in things like commodities and things like blockchain projects, like, for example, crypto, in kind of have these macro indicators to help you with that investment. But if you're just purely going off, what are these things doing, let's say, like on the markets, if you're one of those people that's going on CNBC and looking at, the Dow Jones is up, the NASDAQ is up, blah, blah, blah. This is never what I look at. I always look at macro. I'm not interested in these very much. I understand what they're going to do based on these macro indicators, and it plays out pretty much correct every single time, because if you use these, you can keep your finger on the pulse of the market. But the point, as I was saying here with light crude oil futures, is that we are hitting these 2-year highs, right? So we haven't seen these levels since 2019 back here, right? So specifically today we broke that level. So if we zoom in a bit, we can see that a bit better. And again, this is light crude oil futures. You can see it's basically the same chart here. This is basically with the pattern that we're in is an ascending triangle. Okay, so we're kind of approaching the $70 level. And in the macro chart, you can see here, obviously this is using like contracts in front. So this is technically a different chart, but it's the measurement's different, but you can see the chart pattern overall, if you just zoom out, is the same as this, right? So you can see they're the same pattern. Okay, this one you just got to do that, and then you can see same pattern. Okay, so you can really use them both interchangeably. I was just doing this for example. We're in this ascending triangle. These levels here that we broke today, we haven't seen since October of 18, and this is very important to keep in mind. So we are breaking some all-time highs here in the past couple of years. Now, obviously, when you zoom all the way out, since we're on the daily time frame, or maybe this is a better chart to zoom all the way out in. If we zoom all the way out here and we go to the weekly charts here, we can see that in the macro, I mean, oil, obviously, in 08, we had that massive, this is, you can see the financial crash happening right here, is this massive collapse down to like 38 a barrel. During the pandemic, we obviously had this March, April crash in crude oil. I was able to pick up some commodity producers there, so I'm on the right side of this trade. Luckily, I want to be on the right side of this next trade as well. So keep that in mind. But you can see kind of the overall structure of this, if we just look, is truly this descending triangle, right? This macro pattern is this descending triangle right here that's really going on. You could kind of draw it you could draw this multiple ways, obviously, but you could do this if you wanted to. You could shoot this guy like there and move it down a little bit. Always keep in mind that these are always a range, never an exact point. So I would do something like that and then draw this line out and right about there. So basically what you're seeing there is the lows are kind of slowly bouncing. So we're seeing this consistent level of lows in between like 36 and 27, but the highs is we're seeing lower highs. So consistent lower highs, and we're just consolidating in this price range. Again, this is going back all the way to 08. So that's just a little macro technical analysis. Next, I wanted to move into this. So some important things that you may not know about crude oil. Crude is used in nearly every product you can see, even the device you're using to view this article. So that's important to understand in kind of the any part of the supply chain process. Oil is important. Next, 5 countries are responsible for nearly half of the total global oil production. So another interesting fact about oil is the top 5 oil producing countries are responsible for nearly half of the world's daily production. So you always see these strange distributions. I like to look at a Pareto distribution specifically. Basically, this kind of a distribution that you've seen throughout nature, and it's essentially the thesis that it's like out of all the drivers. This is just an example for it, but out of all the driving population, 20% of the drivers make up 80% of the crashes in the economy. 20% of the top 20% hold 80% of the wealth. These are kind of these distributions that you see in nature. And just look up Pareto distributions if you're confused on that. Maybe I'll do a detailed video on that. But it's kind of one of these logical tools that you can kind of use to understand how these distributions tend to play out. So, for example, these top countries, which is not the majority of the population, this is just United States, Saudi Arabia, Russia, Iran, Canada. These hold a lot of the top oil production. So especially Russia is up there when you take this into account in the amount, the kind of expensive process to mine oil in the United States because of all the bureaucracy and all the bullet in the system compared to something like Russia or something like Iran. Next, Texas and North Dakota produce more oil than nearly every other country in the world. Okay, so that's important to understand that a large majority of the oil population is in America, but it's extremely expensive because of this. It's actually cheaper to have this oil process in other countries. But, the United States actually has a very, very good land situation. One second. A little sip of espresso. Sorry, I had to sneak it in there. So, as I was saying, our just kind of fertile, our land is a great setup for this. It really just is dependent on where you literally are in the world. It's not something like technology, where technology doesn't matter what the land biome that you have in whatever country, whatever state, whatever city. All that matters is the innovation, the ingenuity, and the kind of innovation process in general. So Top 5 U.S. producing states: Texas, North Dakota, Alaska, California, New Mexico. You can see the breakdown there. That's basically it. So the equivalent of 637 Olympic-sized swimming pools of crude oil are consumed daily. So that's pretty insane. When you look at the top consuming countries, the United States has a ridiculous amount of it. So United States, China, India, Japan, Saudi Arabia, Russia, Brazil, South Korea, Germany, Canada. And the interesting thing there is you go, okay, let's contrast that with, let's just search, I'll just pull this up. So population by country breakdown. Okay, so this should give us some sort of a distribution. Yep, here we go. Okay, I like to look at charts like this. So when you're looking at just this populations of the world, you see that right here, this is making a massive amount. In the United States, it's 4%. Okay, so these are all these kind of Southeast Asian and South American countries. From what I'm no, that's just a mixture of these other ones. Okay, that's interesting. But China is 18%, India 18%, United States 4%, Indonesia 3%, Pakistan 3%, Brazil 3%, Nigeria 3%, and then kind of all these tinier populations countries. But when you look at, okay, who's consuming the most oil, that's interesting when you contrast those, right? So you go, okay, United States this much of a chunk, but when you look at the crude oil breakdown, the United States is taking so much. They're consuming so much. And the U.S. imports 8 million barrels of oil per day, even though they're this kind of top consuming. So it's important to keep all these things in mind, guys. You know, you do have to take in mind the petrodollar system. This is another article I wanted to talk about. So oil hits 2-year high with OPEC plus striking bullish tone. U.S. crude futures climbed in the highest in more than 2.5 years after the OPEC plus alliance forecasted a tightening global market, while international efforts to revive a nuclear deal with Iran were yet to reach a breakthrough. West Texas Intermediate rose as much as 3.8% from Friday's close to $68.87 a barrel, while global benchmark Brent topped $70 a level as it failed to hold a sustained period since 2019. The oil glut built up during the coronavirus pandemic has almost gone, and stockpiles will slide rapidly in the second half of the year, according to an assessment of the market from an OPEC Plus committee. So this is important to look at. You know, this oil kind of breakout right there, continued rise. But again, the important thing to keep in mind is, okay, what's the narrative? So you can see objectively, just like I can see based on the data here, the US dollar index continues to fall. That is stock market positive. Okay, we got that. Crude oil continues to rise. Okay, so since these previous highs here in 2019, we've been in this negative market. Now we're pushing to these highs, yet the global actual economy structure is not looking so hot. We're not looking healthy. But these indicators go, oh, all sunshine and rainbows, right? So dollar down, this up, 10-year yield stable. That's what we're looking for. So I have a VPN, so it looks like I'm in Sweden. Yet, you know, the narrative here is saying, okay, you look at these top financial mainstream kind of, what's the narrative of Fox Money, or I don't even know. I honestly, like Jim Cramer, whoever these top guys are on these financial channels, I don't really watch them. I just like to look at the data and form my own opinion. But, you know, you turn on a cable news TV and you see Jim Cramer, one of these financial analysts, and they're telling the masses of people that these things are happening because of the pandemic lightning, because more people are getting vaccinated, because countries are starting to open up again, because we're starting to see this resurgence. But in reality, the economy is not looking great. We've had a massive amount of stimulus. A majority, what is it like? It's like over 25% of US dollars were printed last year. You have all these crazy things going on. You have central bank digital currencies coming out. This is not good. Yet we see this rise. So my overall macro thesis, to wrap this video up, you know, we talked about a lot of things here today. My macro thesis truly comes down to, we are in a bubble, and you want to be on the right side of this trade in history. My way of positioning myself is diversifying globally. That's why I talk about on this channel, invest global, looking at emerging markets, looking at great opportunities overseas, lowering taxes, getting yourself in a position where you can actually plan, trade, and execute in capital markets, gaining exposure to blockchain technology, gaining exposure to key commodities for the infrastructure of the future, like lithium, like cobalt, like nickel. I think silver is a great play. I still think gold is undervalued. A lot of these commodities are undervalued, not holding long-term these ridiculous equities in the United States that are incredibly overvalued, over-leveraged. The West is on the decline. The East is on the rise. In my opinion, that's kind of the macro thesis. and not really West and East, but really developed versus emerging. I really think that as these emerging market countries, the playing field is evened, they will outperform Western countries by far. So that's basically it for this video. If you enjoyed it, hit the like button, subscribe. Let me know in the comments what you think about kind of my thesis, all these different things. That's what I wanted to share for today. I apologize if it was a little all over the place, but I plan to continue doing this. These maybe like weekly kind of macro outlooks with oil, with US dollar index, these different things, maybe on a weekly basis, maybe adding them in more regularly as a kind of like regular scheduled programming on the show. That's all. If you enjoyed it, again, like, subscribe, button all, invest global, and until next time.